Hello, good weekend to all. It's Adil here bringing you a review of the trading session for Monday, the 10th of February 2020. Okay, so let's get started here, folks. Okay, so in terms of the risks, I think we all know. Nothing really to reiterate here. We all know with regards to coronavirus. Okay, so coronavirus fears exceeding the stats for SARS. I think we've just reached 814 dead, unfortunately. So that certainly has exceeded the SARS epidemic, and it's done that within 2 months. I think SARS took almost, more than that, so I think around 6 or 7 months to get to a figure slightly lower than that. So again, that certainly raises concerns with regards to Honda, Hyundai. We have those institutions, and also Foxconn as well. There's a debate now with regards to them obviously reopening and restarting production. So again, that's hurting growth as well. Also, Sino-tourism, Chinese tourism, obviously hurting big brands like Burberry, for example, Canada Goose, etc. I think we already know the narrative there. Again, obviously tourism and luxury goods sector certainly being hit as well. Also, over the weekend, we've had Storm Ciara, which obviously has unfortunately hit the UK quite severely with flood warnings, and also multiple cities in Europe as well. So again, that certainly will obviously dampen growth. I think certain airlines in Germany certainly shut down as well. In terms of bridges, in terms of roads, etc. So certainly doesn't bode well for economic growth going forward. But the main concern I think everybody really will be focusing on is the fact that the Chinese virus certainly seems to be spiraling, but not out of control as of yet. So again, that certainly will remain the background. I don't want to be a fearmonger, okay? So keep that in mind, okay? Chinese GDP obviously will be hit, and therefore growth will certainly slow down. Now, US data on Friday, I've just been reading into the numbers there. The wage growth was down, and unemployment numbers were expected to hold at 3.5, but they actually slightly increased, even though the jobs numbers increased as well. So interpret that how you like, but from my understanding and my interpretation is the dollar certainly held up because of risk off or risk aversion, due to the fact that we had the Chinese scare going into the weekend. And that certainly seems to be persisting. Again, we'll see how obviously the futures markets open up. And let's look at the technical backdrop here. Okay, so I think the technical backdrop certainly needs to be on the back of US indices, from my interpretation, given obviously I give an intermarket analysis viewpoint. So certainly looking at the S&P 500 here. So weekly chart certainly has stalled. We've stalled at 3340. Okay, so that's really your key level, 3340 in the weekly chart. The daily chart as well, as you can see, we did have a breakout, but a potential could be a topping candle here, folks, so keep that in mind. Okay, potential doji candle there topping out. In terms of the volume, let's just quickly give you an insight in terms of volume here. Okay, let's have a look here, folks. So just minimize this slightly in terms of the S&P's volume. Okay, so volume candle itself, I mean, it certainly was significant in terms of the day before. We did have a move higher and higher volume, but then we did obviously weaken in terms of the volume. So the pullbacks themselves have been on weaker volume. So again, interpret that however you like. Now, obviously, if you had an increased volume there on that potential doji, then that certainly strengthens the argument for a sharp reversal in the S&P. So bear that in mind. Okay, so the argument here, really, the way in which I'm going to sum this up. On the one hand, you had news regarding a potential stimulus package, or further fiscal stimulus in terms of middle income individuals from obviously Mr. Trump. Obviously the phase 1 deal certainly has been signed, so that's going to help. There was a phone call on Friday with regards to Xi and Trump talking about the focus on the phase 1 deal and the resumption of that as well, regardless of obviously China slowing down. But as we all know, that certainly will not be fulfilled. So there's a lot of arguments you take on both sides in terms of fundamentals. On the one hand, you can argue the Chinese growth is going to slow down, China shut down, Chinese virus concerns obviously linger, and therefore China will be unable to obviously fulfill its pledge in terms of the phase 1 agreement of buying almost 200 billion worth of exports from the US now. And again, that obviously hurts US growth as well. Adding the fact that obviously you've got concerns regarding coronavirus that's been highlighted by the Fed. Again, that has a negative impact as well. So the whole argument rests on how China obviously performs and how China moves forward. Okay, there are reports over the weekend that China is obviously hiding its stats again. I'm not a conspiracy theorist, but as traders, we need to read between the lines somehow, somewhere. Okay, and that's certainly something to keep into consideration as well. If the numbers start spiraling out of control, although out of China the numbers certainly are not on the increase, because we had a report in Dubai, I think was it, or Sharjah, that one of the Gulf states, that basically they've managed to cure one of the patients as well. So again, this is trading, folks. Okay, you're going to get rumors, you'll get counter rumors, etc., and the markets will swing based on that sentiment. So I'm not really going to go into that. Okay, as traders, I'm just trying to explain that there's arguments on both sides, and may the strongest argument win, and that's how fundamentals basically work. But from a technical perspective, obviously we did make a higher high. Okay, on the S&P 500, we've hit a pivot high. I think after hours it was pre-market, it was around 3,360. I think we almost hit. So again, that certainly needs to be respected. But can we sustain that with this backdrop? That's the question. Okay, it's all about the sustainment of that. Now Foxconn as well, we already know with regards to Apple in terms of its halting production. Now over the weekend there's been multiple stories of whether they're going to obviously continue production, or they're going to keep it shut down. And again, there's been so many rumors and counter rumors. So again, that's something that you'd have to interpret yourself. I don't really want to be giving any predictions here. Our job is just to react accordingly in terms of traders. But the main argument that I was trying to put forward here, and I'm trying to keep this video as short as possible, and it's already going to 6 minutes here, is the fact that S&P 500, if we make a new high, obviously the rest of the world will follow. If the S&P starts to reverse, we've got multiple gaps to fill below, okay, the world markets obviously will follow as well. So the argument at the moment, certainly given the fact that we've got multiple unfilled gaps and we've got that catalyst that will trigger those gaps to close, bias certainly does remain on the bearish side from my perspective and my interpretation thus far. Okay, and that's certainly confirmed with the Dow Transports as well, certainly stalling as well, given the fact that obviously we know coronavirus hits Dow Transports probably the hardest. Okay, transportation, luxury sector, etc., that certainly will be hit the hardest. Now the USD JPY chart is very important as well, okay, because of, as we all know, the yen is a measure of risk, okay, and we certainly seem to be stalling here in the weekly and also the daily chart of the yen as well. We've not broken through that previous high of 110. If you do want to see the S&P obviously moving higher, then we need to see USD JPY moving higher as well on the back of the easing of China fears. So that's certainly something to take into consideration, folks. That's all I can say for now. You do have an unfilled gap above at 111.10. Obviously, if China can alleviate these concerns that a lot of investors have, and then therefore, obviously, in the back of repo and the back of Mr. Powell as well, with this week, I think he starts on Tuesday. If he's obviously dovish, then the market certainly can rip higher. So, argument can be made both ways. Okay, it's the repo on one side, Kool-Aid on one side, and then you've got obviously real market concerns on the other via China. Okay, going back to European indices now. Okay, so that's just my argument, given the fact that we've got intermarket analysis to consider. Okay, FTSE 100 daily chart here quickly. We've certainly topped out on this reversal here. Quite an impressive, obviously, thrust reversal on the from a move from down to 7. I think we hit a pivot low of 7,250. I think pre-market, after market, and then obviously we rallied high up to 7,530. Okay, my understanding and my interpretation, given the fact that sterling certainly is putting in a potential bottom as well, that the FTSE certainly has languishing, given the fact that oil prices certainly weaker as well, given the fact that Russia failed to agree to a cut. Now again, watch Libya. Libya will be the real catalyst to watch, given the fact that if they can negotiate a peace deal there, that means that obviously production will increase, and that will offset any potential production cut from the Russians going forward. So again, that certainly is another number to watch, given the fact that obviously we've got a weakening of demand for obviously oil, given the lack of transportation globally, or the movement in transportation, okay, globally. So keep an eye on that in terms of trade back and forth. Now, daily chart, FTSE 7530, 7510 is a key resistance zone, and again, if the market reverses, we're going back to 7285, potentially even testing 7150. So watch out on the FTSE there. Okay, a 60-minute chart on the FTSE. Key resistance is around the 7510, around the 7540. If you break through that, then you are testing the 7630 zone and then 7700 again. Very unlikely, given the concerns regarding commodities and obviously Chinese concerns as well. Now moving on to the German DAX, weaker numbers came out last week in terms of the German DAX and also the whole of Europe really from that perspective. We did hit a double top on the German DAX at 13,600. We've certainly stalled. We closed a gap below okay, around the 13,477. Now focus or all eyes will be on the German DAX that double top. Now there was a article that came out over on Friday, late Friday, okay, and also you've got Mr. Lagarde as well on Tuesday, so keep that in mind. Obviously any dovish rhetoric there certainly will help, and also given the fact that the euro is languishing as well. Now there was talk, as you can see here, the euro broke that key support 1.1, and now we're obviously looking to potentially test 1.0920 and down to 1.09 and probably 0.8 as well. So this certainly is a stimulus for European equities. Bear in mind, whenever the euro drops, European equities certainly catch a bid, okay, given the export side of the equation, okay, bear that in mind. It's almost like a stimulus for exports. But on the other hand, we did have an article regarding fiscal stimulus in the eurozone, okay. So again, if that certainly does the rounds, and you are looking to see a double boost on European equities in the back of a weaker euro, and obviously fiscal stimulus as well. So keep that in mind. Having said that, though, the German DAX certainly is into a double top, even though the dismal economic data came out last week with regards to eurozone. Moving on then, in terms of the French CAC here, quickly give you an insight here. Looking at a daily chart on the French CAC again. Now the French CAC certainly remains weaker than the actual German DAX, its counterpart. At least the German DAX attempted to close the gap and attempted to hit double top. The French CAC certainly hasn't done so at all. If I take the pivot high to the pivot low, we've retraced 75%, which is a weak sign. Okay, and therefore looking to potentially reverse lower on the French CAC. Now, bear in mind, obviously oil prices as well. Now again, if we do push lower, then you are seeing a gap fill around 5,840 zone, and then you've got a gap fill below at 5,650 as well. So watch out in terms of a reversal here. Now you can argue for a potential H&S top as well. There's your left shoulder. Your head you've obviously put in at 6,110. Looking for a right shoulder at fib 75%. The market sells off in the back of China. Okay, that certainly is very, very plausible. Very, very plausible. Okay, and a very strong argument can be made if the US or the S&P 500 tops out there and starts to move lower on the back of China coronavirus fears. Okay, now in terms of, and also another factor here as well, this is quite important, which I'm quite surprised at the euro weakness as well. Lagarde did say last week that the ECB has run out of tools in terms of monetary policy going forward and the effectiveness of monetary policy. So they certainly seem to be waving the white flag there in terms of any potential further monetary policy experiments, and therefore that doesn't bode well for European equities. Okay, so again, remember, it's a liquidity driven market. Fundamentals certainly have been ignored, otherwise we wouldn't have retraced 75% in the back of coronavirus phase, so bear that in mind. Okay, last but not least is Euro Stoxx. Now Euro Stoxx has been quite impressive, and the strength has been very impressive as well. As you can see, the weekly chart there, quite a strong bullish candle in the back of a weaker euro, which I've already explained. And if there is this potential fiscal stimulus carrot that's being dangled, let's see how that certainly unfolds as well. Now we've failed to hit double top, but it certainly has been more impressive than French CAC, as you can see here in the Euro Stoxx. So again, do we break above the key resistance at 3,813 and push higher, or do we actually start to reverse lower? That's the question. That is the question. Now the weaker euro certainly has helped. Okay, Lagarde's comments in terms of a hawkish stance certainly hasn't. But this fiscal stimulus carrot, let's see how that unfolds. And if US equities obviously do break higher, then obviously European equities will follow suit, and it will be quite an impressive thrust at that as well. So bear that in mind. Okay, I think that's a wrap here. This video certainly has gone on for too long. Please be sure to visit my website. Check me out on Twitter as well. My Twitter handle is certainly there. And wish you a happy trading week. Goodbye now.